Hey everyone, I'm Jerry Saffron. This is Kitco News. Don't forget to hit that subscribe button to stay up to date with us. Well, let's start with some fresh data. The U.S. producer prices, or the PPI, came in lower than expected, rising just 0.1% in July, signaling a continued moderation in inflationary pressures. Now, this comes on the heels of last week's significant market sell-off, and with some analysts speculating that the Fed might consider rate cuts sooner rather than later. Now, the direction of the economy is on everyone's mind. To break down what this all means for the markets, we're joined by Anmol Singh. Anmol is the founder of Live Traders, which has been voted the #1 trading education firm for 3 consecutive years. Now, today he'll guide us through the technicals on the S&P, the Nasdaq, commodities, and we'll also dive into the recovery potential of Fintech stocks and finish up with a little look at Tesla. Hey, Anmol, welcome to Kitco.
Hey, looking forward to chatting with you. Thanks for having me again.
Me too. I mean, we got so much to get to. Let's start with the Meg 7, or what some people call the Meg 3 now, with the S&P 500 has looked like it's reclaimed that 5,400 mark. The Nasdaq up slightly today. There's been a significant volatility following last week's sell-off. Technically speaking, do you think that we're on the brink of a broader market correction, or is this just a temporary pullback and we're starting to see those levels jump back up now?
Yeah, so I think my view has been that we are on a cusp of a bigger pullback. However, there aren't any technical indicators suggesting that at the moment. So if we take a look at the chart here, we are still in a nice uptrend in the broader markets, continuing to hold that uptrend. Even despite this recent pullback we got, this was similar to the pullback we got, back in April, which also held, the moving averages and ended up resulting back up. So this is just an environment to be cautious on, because I think there's going to be a lot of divergence between the different stocks, because a lot of the tech stocks have seen a tremendous run up already this year. I mean, they're up a lot. Microsoft, Apple, Google, Nvidia especially, and Meta. So they've all seen tremendous uptrends. So it's just a time, I think, from a technical perspective, to be a little bit cautious, to not overextend yourself. And if you are somebody, who's using leverage, that's something you might want to be careful of as we proceed forward. But right now, there aren't any warning signs in the market. Markets are still continuing to hold the uptrend. And we did that as of, just the last couple of weeks as well. So I think we're just going to see a continued uptrend.
Yeah, interesting. I mean, we're looking at it today. Obviously, the S&P is up. We're getting some of this news with the PPI. What are some key levels on SPY or the QQQ that you're watching? I mean, when you look at it, how are you kind of assuming where we're going next?
Yeah, so I'm kind of just zoom out and I take a look at the chart and ask myself the question, what's the prevailing trend, right? And currently, we are uptrending. We get small pullbacks along the way, but overall, we're still in a massive uptrend. So I think there's nothing to be overly concerned about. The only thing that I would suggest, or at least what I'm doing for my own portfolios, is lightening up exposure on some of the stocks that have already seen a tremendous run up, like Nvidia, like Meta, like Microsoft, and just start to, lock it in or rebalance your portfolio so you're not overextending yourself on one particular industry, because tech especially has seen a tremendous run up, and that's not always going to last. Nothing goes up in a straight line. Everything has pullbacks along the way. So I think that there is a potential chance, like before the elections, because we're in a very uncertain environment with every day there's a different news cycle. There's talks about Iran, Iraq, wars, like all these things going on. There's just a lot of uncertainty. So I feel like it's a time to, okay, let's pay ourselves a little bit, let lock in some profits along the way, and maybe try to look at some of the sectors that did not see that tremendous run up. But at the moment, the key levels for the S&P, I think as long as we stay above that most recent low that we had of, let's say, about on the S&P 500 SPY, like about 510. As long as we stay above 510, I don't think there's anything to be overly concerned about. We're likely to resume this uptrend and perhaps test that 563 area on the S&P 500. I would definitely start to get a bit more concerned if we take out the most recent low, because if we go into a monthly time frame chart, you can clearly see that every time we get overextended, we have pullbacks, right? And we are kind of in that area. So technical traders, we call this a measured move. So measured move would simply be something like, if we take, like, say, this low to this high, and typically they happen in the same proportion. So once we draw that, we are in that area, and where we saw that pullback we saw a couple of weeks ago. So I think we're definitely in an extended territory. Longer pullback is not out of the cards, but I wouldn't be concerned about it as long as we stay above 510 on the S&P 500. And the similar levels on the Nasdaq would be its most recent lows, about 423. So I think as long as we hold those areas, this uptrend is likely to continue. Once we break those areas, then we're probably going to see a deeper pullback, perhaps on the Qs down till 384.
Right. And you know, a lot of this, as you mentioned, is just healthy profit taking. A lot of people taking profit, much like traders should. Fundamentally, though,
Yep.
we talked a little bit about that Mag 7, and like I said, it almost seems like it's been the Mag 3 or 4 for a while. So if you're not looking at these mega caps, you're not looking at the NVIDIA, what are you specifically looking at? Is there any, some specific stocks or equities that you're looking at and you're keeping an eye on and you think, okay, this is not overevaluated here?
Yeah, so I think Tesla has been, it's part of the Mag 7, but it's not really participated in any of the run-ups like the other stocks have seen. But we're noticing even funds, like Warren Buffett taking profits on Apple, I think sold out half of his position. So we're starting to see a lot of funds position themselves where they're saying, okay, what hasn't moved yet? What actually has the potential for the next year or two? Because these Mag 7s, might pull back. So I think for me, I've been focusing on Tesla. I've been in and out of it, traded it a few times. But the overall pattern on Tesla is still this downtrend that is continuing from back in 2021. So once we draw this downtrend, we are currently in there. We had a little breakout a few weeks ago, and then there was natural news events that came in. Tesla ended up pulling back. So for me, the level that I'm watching on Tesla is 235, right? If we get back above this downtrend line, above this 235 area, I think Tesla is going to move straight into the $300 level, which is the next area of resistance. So 235 is the key level to watch on the long side. It needs to get above that for me to be really excited about it. And on the downside, I love buying things at the uptrend line, which I did over here. We did over here again. So I think the levels to watch on the downside in case things get a little bit interesting in the markets, we see a deeper pullback than expected, then Tesla $160 is a good level to buy it on the way down.
Yeah. Anmol, how do you bust through the noise? I mean, yesterday we had Donald Trump sitting in a conversation with Elon Musk. He's starting to venture into, he bought X or Twitter, and he's being a little bit more vocal with his opinions. Some shareholders thinking that's good, some not so much. I mean, what's nice about technical analysis is you don't really have to look through the noise. So, how might Tesla's performance be impacted by other macro factors, or is it just its earnings report here?
Yeah, so I think for me, the reason I focus on technicals, as you said, is like there's so many opinions in this market, right? You can talk to 10 people and get 10 different opinions. So for me, I look at it that if everybody has a different opinion, that's just subjective data. It's one opinion versus another. Pick your fundamental analyst, right? One opinion against another. Technicals are just giving us exact price points. Okay, above this, we can get in. Below this, we can get in. So it eliminates all of that noise of what's going on, of the news cycle, because there's every day something new. But you're right, Elon being a little bit vocal has definitely not helped the brand, because a lot of funds that are more on the other side of aisle politically, they're not really excited about it. And we're also seeing some sort of, EU coming after Elon. There's a lot of lawfare going on. So a lot of that does, suppress the price of the stock. But long-term, fundamentals will lead the way on Tesla. And I think October, they are announcing those robotaxi platform. I think there's a lot of catalysts on the way with the robotaxis being announced, with the new cheaper Model 3 coming out, Model 2. And then they're talking about this next-gen vehicle that they're working on. So there's a lot of catalysts that might cause this technically to break out above the trend line. And, keeping in mind that this one didn't participate with that rally. But I don't see Tesla making any major moves until like next year. I think for the rest of the year, it's likely just to chop around in between these levels. But I do think that perhaps next year, or maybe if after interest rates come down, Tesla's going to be a pretty big beneficiary of that.
Yeah, Tesla's valuation has always been such a big point of contention, I mean, even when you see some strength on the charts, I know that there's so much momentum in the market. So you were not then, nearing a tipping point for Tesla here.
Yeah, I don't think we're there yet. As this pattern starts to get tighter and tighter and collide, then typically around, I think, November, December, or January, or if interest rates come down to September, then perhaps we could see a rally there. But, with Tesla, the thing is that if you value it as a car company, then yes, it's overvalued, right? But if you're just looking at a car business, then you can definitely make a case that the valuations don't make sense. But when you start to look at, okay, what if the robotaxis is a hit, right? What if they're now getting into the Uber type of marketplace? Does that add any valuation to that? Or what the lower models come through? What happens there? Then the Optimus is not something that I'm factoring in, because I still think that's like ways out there in the future. But that's another thing that, could potentially transform the way we do business and the way we do our work. So I think those things to look at. But then also the energy division is growing rapidly. They're having record quarters there. Energy businesses are really growing. So I think that's something to look at. But I think the biggest valuation metric that at least funds and everybody's looking at is if they're going to be able to solve full self-driving. And how soon can they do that? Because it's been under talks for many, many years. It hasn't happened yet. But we're getting close with the new updates that Tesla has released. So I think that is going to be the proponent. If they can solve full self-driving unsupervised within the next 12 months, then they're going to see a rapid valuation increase and might even test all-time highs. But as we know with Elon's timelines, they're optimistic. They usually don't happen in that time frame. So that is the only risk factor in that stock, is that they aren't able to solve it, or if they aren't able to get the regulatory approvals for them to be functioning in all the cities.
Right. Yeah. No, the pressure and the management. I mean, most important, obviously, right? Okay, let's switch over to commodities. Gold, silver, oil continuing their uptrend. What are the charts sustained about what do they suggest here about the sustainability of the momentum? I mean, where are you looking here? Are you looking at ETFs when you're looking at commodities?
Yes. So when I trade commodities, for gold, I look at GLD. And then for silver, I look at SLV. You can also look at PSLV or PHYS for gold. But the GLD and the SLV are the most used ones. So we saw a beautiful breakout, right, earlier this year, right about February of 2024. This thing was in consolidation for 4 years. 4 years we've been chopping back and forth, and we're breaking out of a 4-year range. So we're likely to see this momentum continue on gold. A lot of countries, China, even Russia, India, they're buying a lot of gold every single day. I don't see that slowing down, especially with the BRICS nations coming together and thinking about maybe making gold a big, formidable part of their strategy. So I think gold's likely going to continue its uptrend. Now, sure, we're going to have pullbacks along the way, but I do not think we're going to retest the lows that we broke out from. I think we're going to hold this 191 area on GLD, and any pullbacks are likely going to result in a continued uptrend. And silver, I'm actually a little bit surprised about. It did get a nice move.
You're not the only one.
I would have. Yeah, but I would have thought silver would be a leader rather than gold, but I was clearly not spot on that one. We saw a breakout on silver too here in March of 2024, and I think this pullback to me is a viable area on silver that I'd be looking to get in. I do think this is going to result in a higher low and then a trend back up on SLV as well.
A lot of guests that we have on, obviously Kitco, we have a mining division too, and some of these prices on the metal side haven't touched the mining stocks. Some ETFs they have. So, I mean, we're looking at the macro factors. So, I mean, we got the producer price indicating moderate inflation. Could this cool off the commodities rally? I mean, are there any technical indicators or price levels suggesting a potential slowdown or reversal?
I think, especially silver has already seen a pretty good pullback recently from, this $29 area to 25. So there's going to be pullbacks along the way, but I don't think it's going to be any substantial pullback that's going to result in us retesting those lows from last few years. I think the pullbacks were going to just result in a higher low. And this uptrend, I think, in commodities is likely to continue as people look at, okay, our equity is overvalued. Where do we put our money? So I think with all this inflation noise and all this geopolitical stuff, especially, I think gold and silver are likely to remain strong, at least for the next few years.
Yeah, Emma, when you're looking at specific stocks, I mean, are there any commodities or related stocks that you think could outperform in the near term? Give me a little bit. I know that it's for your subscribers, but is there anything outside of GLD that you're looking at you think, okay, this is going to pop?
So I'm looking at actually stocks that have been beaten down and not in any commodity space. When it comes to commodities, I primarily just trade the commodity itself because it's much easier to predict. If you're looking at commodities to go higher, then you don't have to worry about your stocks not participating. So I'm not a huge proponent or believer in trading individual commodity stocks like gold miners or silver miners, just not been something that I've partaken in my strategy. But I'm looking at other stocks in, let's say, the fintech sector of what hasn't participated and what could be a beneficiary of when interest rates do come down. So for me, I've been focusing on stocks like PayPal, stocks like Affirm, AFRM, and stocks like SoFi Financial. I think those stocks have been beaten down, but technically they are now at a level where they seem to have found support. So this is the chart of PayPal, and you're going to see that PayPal came all the way down from $308 down to 65, and now we're seeing some stabilization here. We're not really continuing the downtrend, and we're seeing what we call technically like a rounding bottom. So I think it's forming that rounding bottom now, and I do think that PayPal is a stock that currently is at $65. I would not be surprised seeing it at 100. So I think that's kind of what I'm looking at on PayPal. These bottoming patterns are extremely strong. AFRM actually had a similar pattern a while ago. If you notice here, AFRM came all the way down. We had a rounding bottom, and then the stock saw a rally from $10 all the way till $52. And I think so PayPal is going to have a similar trajectory, in my opinion, over the next 12 months.
Interesting. You think it's going to hit that all-time high, or it's just going to bounce back there as a nice little, not too much of a melodramatic touch?
I don't think that it's going back to all-time high. I think the stocks like, the COVID stocks, I call them Zoom, PayPal, Teladoc, Roku. I don't think they're going back to all-time highs, but I do think, can PayPal go from 65 to 100? Absolutely. I think that's kind of what, as a trader, that's what I would look at is, what can I buy now which has a low downside potential that has already gone down, right? So how can we get into a position where if I buy that 65, if it goes to 100, I would definitely be taking my profits at that level.
Interesting. Are you looking at any of the utilities or anything like that? I mean, with the current tightening in the financial conditions, can fintech really stage a comeback, or is there more of a downside risk when we start to look at people stopping spending? I mean, they're trying to pull back that discretionary spending in some of these areas.
Yeah, so there's a lot of talk about discretionary spending kind of coming down. However, when you look at the credit utilizations, people are really overextending themselves. So there's definitely a risk factor for the overall economy of what happens if these companies like even Affirm are not able to make it because of the debt. Because there was a stat I saw that majority of Americans are 90 days late on their credit card payments right now. So that is a pretty, I guess, scary thing to look at. But I haven't noticed, at least in our industries, that people are slowing down. I think people are still getting things on credit. They have so many different options these days with buy now, pay later options that consumers are still, in my opinion, looking to invest. We have been, you look at stocks like Walmart and Costco making all-time highs, and I think we haven't seen that slow down yet.
So just ride the run, I guess. Is there any specific, I got to leave you with this one. I know, again, it's your subscribers, but if you could point out to one equity that you're most excited about right now, what is it?
I'll give you two, Tesla and PayPal. So I think PayPal at these current levels is really, really interesting. Like right here, I don't even think that it needs to really do a whole lot. For me, I have no position in PayPal right now. However, as it starts to get above, I'm going to say 67, which is this prior resistance area, that's when I will really get excited about it and start establishing a position in PayPal. So that's for me, PayPal. Tesla, I own long-term. I own a lot of it because as a trader, you have the option of selling covered calls and still generating an income while the stock isn't doing a whole lot. But for me, I would really get excited about it as it starts to come back above 235. But I have been still buying and accumulating on these dips.
Yeah.
So those are the two stocks that I think for the next 12 months, right? I'm not going to forecast 5 years, 3 years down the line, but for the next 12 months, I think just from a risk reward standpoint, Tesla and PayPal, I think, have a really good opportunity here. And also SoFi Financial.
SoFi, what was that equity before we take off here? What was SoFi?
So SoFi is the bank, right? SoFi Bank. And technically, what we're looking at here is similar pattern, right? We had this rounding bottom. We had this nice move up. So now if SoFi gets back above, I'm going to say like $8. Right now it's at 657. If it comes back above 8, I would not be surprised seeing this back at 14. And these patterns play out over and over in the markets. We had Palantir had the similar move. Palantir here came all the way down. Stock went to $6. And then at that time, I think I talked about it hitting 20, 25. It's at 30. So I think the same trajectory technically should play out on SoFi Financial, PayPal, and Tesla. But it's a 12-month kind of a time horizon trade.
Yeah, makes sense. Always nice to have a little history in the charts. All right, Anmol Singh, founder of Live Traders, joining us from New York today. Thanks for this, man. I appreciate your time. That was really helpful.
Oh, thanks for having me.
Thanks, Anmol. We'll see you soon. I'm Jeremy Safran for all of us here at Kitco News. Thank you for watching. Hit that notification button, and we'll see you next time.